Many of these IPOs have done very well, although not all of them. Lyft shares are under pressure. Uber comes to market this week. And Warren, you mentioned this weekend, you talked once again about how you had looked at Uber about 18 months ago.
Because I looked at it, I really don't want to discuss Uber. And I don't have any special feelings about it than any other coming to market. But I would say that in 54 years, well, I don't think Berkshire's ever bought a new issue. I mean, the idea of saying the best place in the world I can put my money is something where all the selling incentives are there, commissions are higher, you know, the animal spirits are rising. I mean, that's going to be better than 1,000 other things I can buy where there is no similar selling enthusiasm and the desire to get the deal done and extra commissions. That's the single best thing to buy on a given day. I mean, it's
I can't think of a time we've ever done it.
Yeah.
Ever bought an IPO?
Yeah, never bought one.
No. How can it be?
They don't even call us.
Yeah, but how can it be the best single thing to use your money for in a given day is something that they got everybody in the world out pushing it. You know, it just doesn't make any sense. I mean, I'm not saying that necessarily what we're buying is going to work out better, but there have to always be better things than one single issue. If you make one decision on investing, if you can't find something among all the choices we see that is better than something that and like I say, you know, the commissions they've come down, I think, now on this, but I mean, the highest commission thing that a stock salesman could sell to securities was the new issue. You know, so you have all this push behind it. We like to buy things where nobody's making a dime selling them to us.
Charlie, just specifically on some of these companies, and I won't talk about Uber versus any of the others, but a lot of these companies are coming very late in the cycle. They've had massive private capital that's been put to work to this point, and they still have massive losses and the need for more capital.
What's even worse than that, some of them have preference for each round, and so the rounds aren't really fair rounds. There's a lot of lying in modern finance.
So you're not in favor of any of these big
I don't like lying.
What do you think of these? I ask this because we have a lot of retail investors who watch and who are looking at this and they feel the excitement behind it.
Well, aren't you going to get any wonderful advice from us about buying IPOs?
Whenever you buy a stock, let's say you're buying General Motors, 1.4 billion shares out. We'll say the stock's 40, it's a little below that. You should be able to take out a one-page sheet of paper and say, I am buying the General Motors company at $56 billion because. And if you can't answer that question, if you can't write that out, then you'll go on to something else. And if you're buying Berkshire, you have to say, I am buying Berkshire Hathaway at $500 billion because. And if the answer isn't something you can write, you can't say I'm buying it because my neighbor thinks it's going to go up or because, you know, everybody's talking about it on CNBC this morning or whatever it may be.
Or I like to ride around an Uber.
Yeah. No. That's the question you answer. Now, when you buy groceries, buy everything else, you can answer that question. But if you can't answer it on something that you're involving your savings of many years for, why in the world why should you be doing it?
Here's a tough one, and it's an Ask Liz question from a guy named Joe Borsini, because he's interested in Alibaba, and he says, what do you think of an Alibaba IPO, a buy or a pass?
Well, I have no idea what it should be for him. I can't recall when I bought an IPO, literally in 50 years. Maybe I have, but I don't ever recall.
Why not?
Well, it's very seldom that an IPO, by design, it is going to be priced at something I understand anyway, at a bargain price. I mean, why would a seller, come to market and offer something at a bargain time? So, in fall of 2008, nobody was bringing IPOs, but that was the time to be buying stocks, So it's never been my game to read a prospectus on something and figure that somebody's offering me a bargain.
Well, has it been Charlie's game ever to buy an IPO?
Well, we can ask him.
Let's ask Charlie. He comes in, and here comes Charlie Munger, the vice chair of Berkshire Hathaway. Welcome, Charlie.
Welcome indeed.
Thank you so much for being here. You know Alibaba, correct? I mean, you're very focused on Chinese businesses.
Warren knows more about Alibaba than I do.
What do you think of an opportunity like that? Is that something completely out of your realm for Berkshire?
Well, it's out of my realm.
Yeah, that's
Somebody else in Berkshire will have to do it.
GM has been looking to the future, trying to find what the future of its industry is going to mean. And one of the things they've done for that is to invest in Lyft, which is going public tomorrow. The initial price for that just got raised, and it now values the company at around $20 billion in market capitalization based on this new pricing. How would you value Lyft when they say inside the prospectus that not only are they not profitable, they've lost almost $1 billion last year, and they're not sure when they'll be profitable? How do you figure that out?
Well, I don't know whether the aggregate valuation they're talking about is close to 25 billion now or something like that. And I certainly wouldn't buy a business for 25 billion. I always think in terms of buying the whole business. If we buy 100 shares of General Motors, we think we're buying the whole business, and we multiply. If they've got, the 200 million shares out, and it's selling at 35 or something like that, that would be 40-odd billion in the case of GM. So I look at what I'm getting as a part owner of a business, and I don't know why, with all the things you can buy for 25 billion in this world, that you would pick a business that really has to be earning 2.5 or 3 billion pre-tax in 5 years to even be on the same radar screen as things you can buy right now. So I have never been a big buyer we haven't bought an initial public offering, or I haven't, Charlie hasn't, I think since 1955. I bought 100 shares of Ford when it came out.
What did you buy?
What?
What did you buy?
It was Ford Motor. Gus Levy was running it as a favor, gave me 100 shares, and I have to admit it now, I think the statute of limitations has expired. I took a free ride on 100 shares and made $500, and it's the only time I've ever done that. But I was making $12,000 a year at the time, and 500 looked very good to me. But I think buying new offerings during hot periods in the market, I don't think it's anything the average person should think about at all.
You have said that you've missed out on some of those, like you should have bought Amazon a long time ago, you should have bought Google/Alphabet a long time ago. Could this be one of those scenarios?
What was the last question?
Could this be one of those scenarios?
Oh, it always can be.
Yeah.
I mean, there were a paradise in the desert inn one time, many years ago, that no, they had them in a little case. They came up 32 times in a row. Well, that's what, 1,000 times, 1,000,000 times, 1,000,000,000 times, 4 billion to 1, a little over. So you can go around making dumb bets and win. It's not something you want to take as a lifetime policy, though. I mean, I don't worry about. I worry much more about the things I do than the things I don't do. I mean, I missed all kinds of opportunities in my life, but that's you just want to make sure that you're on the side of the house when you bet rather than bet against the house. You don't have to really worry about what's going on in IPOs or people making money. People win lotteries every day, but there's no reason to have that affect you at all. You shouldn't be jealous about it. I mean, if they want to do mathematically unsound things, and one of them occasionally gets lucky and they put the one person on television and the million that contributed to the winnings with the big slice taken out for the state, don't get on there. It's nothing to worry about. Just all you have to do is figure out what makes sense, and you look at buying. When you buy a stock, you get yourself in the mental frame of mind that you're buying a business. And if you don't look at a quote on it for 5 years, that's fine. You don't get a quote on your farm every day or every week or every month. You don't get it on your apartment house if you own one. If you own a McDonald's franchise, you don't get a quote every day. You want to look at your stocks as businesses and think about their performance as businesses. Think about what you pay for them as you would think about buying a business, and let the rest of the world go its own way. You don't want to get into a stupid game just because it's available.
Yeah, well, I think that your children are right to look for people they can trust in dealing with stocks and bonds. Unfortunately, more than half the time they will fail. in a conventional answer. So they really have a hard problem. If you just listen to your elders, they'll lie to you and spread a lot of folly.
But they really have an easy problem.
But
In the sense that American business as a whole is going to do fine over time. So the only way that they can...
not the average client of a stockbroker.
Well, we'll get to that later. The stockbroker will do fine.
Yes, that's true.
Yeah, but they don't have to do that, and we can talk. Well, I'd rather address that just a little later. But just you don't want to worry. You don't want to be. A lot of problems are, Charlie would say, are caused by envy. You don't want to get envious of somebody who's won the lottery or bought an IPO that went up. You have to figure out what makes sense and follow your own course.
Pinterest or something along these lines. Is this different? How do you value this stuff?
No, yeah, but the big ones have losses, and some of them report earnings differently than I would report earnings. I mean, we haven't bought IPOs, and if you think about it, you've got a whole bunch of people on the other side who have an interest in marking up each stage of it, even if it's phony. Sometimes they offer one price for the employees that already have the shares, but then they have an artificial price so they can say that this round went at a higher price. They're picking the time to sell to you. I like it when I'm picking the time to buy in a 2008 rather than having them pick the time when they've decided this is the time we can cash in by selling to you. We're going to do you a big favor and let you buy in. So I have never been a big fan of IPOs, and the valuations are kind of staggering now on some.
Any in particular?
No, not that no.
Not that you feel like discussing.
By category.
But the category of those that you think the valuation is staggering is based on what? Just earnings per the market for some of these?
If a company's going to come public, we'll pick a figure, $50 billion.
Okay.
What should you expect it to earn in 5 years? You should certainly expect it to be earning $5 billion pre-tax. I mean, if you wait 5 years to get 10% on your money, and people, they don't sell them that way. There aren't that many companies that earn $5 billion or more pre-tax. There's a fair number, but it's not that easy, and it's particularly not that easy if you count what you're paying the employees and stock options and all that sort of thing.
The first question, is it entirely possible that you could use our mental models to find good things to buy among IPOs? The answer is sure. There are a zillion IPOs every year, and buried in those IPOs, I'm sure there are a few cinches that a really intelligent person could find and pounce on. So, welcome. But the average person buying IPOs is going to get creamed. So, if you're talented enough, why, sure, that will work. The second question, I forget.
About the government offerings, or was it?
About government spinoffs?
Give him the spotlight again. There he is.
What was the second question?
It was just, would the attitude of Berkshire Hathaway be different as opposed to investors? Thank you.
Yeah, because the IPOs are normally small enough so that they won't work for us, or they're high-tech where we couldn't understand them. And so, by and large, if Warren is looking at them, I don't know about it.
Yeah, I mentioned earlier how an auction market prevailing in the stock market will offer up extraordinary bargains sometimes, because somebody will sell 0.5% or 1% of a company at a price that may be a quarter of what it's worth, whereas in negotiated deals you don't get that. An IPO situation more closely approximates a negotiated deal. I mean, the seller decides when to come to market in most cases, and they don't pick a time necessarily that's good for you. So it has, I think it's way less likely that in scanning a list of 100 securities that are trading in the auction market, in the 100 IPOs, if you scan 100 IPOs, you're going to come up with something cheaper than scanning 100 companies that are already trading in the auction market. It is more of a negotiated sale, and negotiated transactions are very hard to get bargains. if you take the houses in Omaha, somebody that lives next door to somebody who sold their house for $80,000 and their house is more or less comparable, they're not going to sell it for 50. It just doesn't happen. It's too important an asset, and they're cognizant of what it brings, what is being brought for similar properties. That's what happens in negotiated sales. Now, if on the other hand, there was a whole bunch of entities that owned 1% of each house in Omaha, and you had an auction market in those 1 percentage points, they might sell it damn near anything, and occasionally they sell at crazy prices. So in my view, you're way more likely to get incredible bargains in an auction market. It's just the nature of things. And the IPO is closer. Sometimes there will be IPOs in terrible markets, and they may come very cheap. But by and large, that is not when IPOs come. They come when the seller thinks that the market is ready for them, and they come with an informed seller thinking it's a pretty good time to go public. And that you'll make better buys, in my view, in an auction market.